Hello traders and welcome to another video review. Today is Wednesday, June 4th, 2025. Let's take a look at the economic calendar for today. API weekly crude oil stock data were published overnight, rather increase from minus 4,023 barrels to minus 3.3 million. AIG manufacturing index in Australia improves from minus 26.5 to 23.5, and PMI data ahead of us. Japan bank services PMI 51 points, beats the expectations of 50.8. Australian GDP worse than expected, 1.5%, but in line with the previous number of 1.3%. Russian Federation Services PMI 52.2, increase from 50.1. The Spanish Services PMI worse than expected, 51.3. We are waiting for the Italy Services PMI, France Services PMI, Germany Services PMI, and the Eurozone Services and Composite PMI data that is scheduled for release at 10 o'clock. At 30 minutes later, 10:30, Composite PMI, Services PMI data are scheduled for release from the UK, and then we switch to the US session. ADP non-farm employment change 2:15. At 2:30 labor productivity from Canada. FOMC member Bostic will give a speech at 2:30. Interest rate decision in Poland is scheduled for release at 3 o'clock. The market participants expect the National Bank of Poland to keep the interest rate at the level of 5.25%. Composite PMI Services PMI data from the USA are scheduled for release at 3:45. At the same time, we got the Bank of Canada interest rate decision. The market participants expect the Bank of Canada to hold interest rates at the level of 2.75. Bank of Canada rate statement is scheduled for release at the same time. At 4 o'clock, we got the RSM non-manufacturing PMI data, and press conference of the Bank of Canada is scheduled for release at 4:30. At the same time, crude oil inventories data are scheduled for release. At the end of the day, Beige Book from the US is scheduled for release at 8 o'clock as usual. So very busy day, 2 interest rate decisions. So without any further ado, let's switch to the charts. So let's switch to the 4-hour chart of the euro dollar, and we can clearly see that the technical support at 1.1364 had proved to be quite nice technical support. The market tested that trend line. As you can see here, we had a false breakout here, tested the trend line here, low 1.1358, and now we have a bullish engulfing pattern. So because of this fake breakout to the downside, the position of the bulls is even better, which means that this movement to the upside might be continued very soon. So we should expect the market to move higher above the recent swing high at 1.1455. So let me just place this apparently swing high as the technical resistance, and we should keep an eye on this level alone. Momentum is quite strong, 53 points. Momentum is positive. Market is ready to move higher. If we will not break below this trend line, let me just mark it a little bit thicker, below this orange trend line, right? If we stay above this trend line, then the market should go up. But because we got already one of the fake breakouts, you can see straight on that any breakout below this trend line will not fool anyone anymore, and then the market might turn more negative in the short term. So please notice the euro dollar going up. Because of the interest rate decision, let's take a look at the US dollar versus the Canadian dollar. So this is what we got on the 4-hour time frame chart. It's obviously easily to spot that this level here must be the technical resistance, 1.3749. So we will mark it as the technical resistance, and the recent technical support might be located here, low of the June 2nd, 2025. So that's the technical support. If we zoom out a little bit, we can see that this is the lowest level in many months. So please consider the situation here that we might see some sort of the bounce from this level, as the current rate is very attractive to perform some kind of a short squeeze or maybe a bullish run. Nevertheless, the market still needs some good momentum, needs positive momentum. So far there isn't anything like this anymore. The momentum is negative, just bounced from the extremely oversold market conditions. However, if you can see here, we got the bullish divergence. Let me just grab my arrow so you can see that the market keeps making the lower lows. So this is the lower low and this is the other lower low, but here there is no lower low. So this is a bullish divergence, and we might see some kind of a surprise even towards the moving average, which is 1.3848. So please keep an eye on the US dollar versus the Canadian dollar. Right now, the current range is very small, very limited. Market is waiting for the data from the Bank of Canada. When the data are published, then we might see some sort of the upside movement. The divergence is pointing out, from the technical point of view, the divergence is pointing out the bullish movement. Cable, let's take a look at the cable just to confirm that we are still above the technical support. Let me just mark the local high. The local high was made at 1.3557, so that's the technical resistance, and this level here will now act as the technical support, 1.3509. All right, so momentum is positive. It's not strong, but it's positive, so we are waiting for the movement to the upside, preferably above the wave 3 high. So maybe this wave 3 high is somewhere here, 1.3590, and then of course the wave 5 should be fully developed. We got the data from the crude oil, and as you can see, the data from the crude oil helped the market to move towards the technical resistance and our supply zone, 63.85, 64.20. This is the zone tested overnight, and the market might be getting ready for another breakout to the upside. So please keep an eye on the current situation here. Any breakout higher would open the road towards this level here. Let me just mark it on this chart, so there is no doubt about it. This is the level of 65.10, so that's the next technical resistance for the bulls. But for now, we are still inside of this trading range, so we need a good momentum. We need a strong breakout. Decisive. That decision must be made. Aggressive buying must be made by the bulls if you want to break out of this range. Otherwise, we will definitely got the option to stay inside of this range and just continue this range trading. So either we break and go higher, or we stay here and trade more to the downside. Last but not least, the Bitcoin for our time frame chart is looking quite strong these days. However, the technical resistance at 106,471 is now the major problem for the bulls, because there is a 106,960 technical line here, which is called 100 periods moving average on a 4-hour time frame chart. So this is pretty nice sort of resistance for the bulls, right? They are trying to break. They tried one, they tried second time, they tried 3 times already, and they failed, right? So maybe temporarily we'll have some pause, we'll have some pullback, supposedly, but nevertheless we should see a resumption of the uptrend and any successful breakout above technical resistance, and then 100 periods moving average opens the road towards the trend line. Of course, there is a very close to the trend line. There is a 108,329 technical resistance, so any breakout above the trend line and this technical resistance is very bullish. Momentum is at the level of 50, doesn't actually looks really bullish, so we should see what will happen next on this market, as the market needs to develop bigger momentum to break above this the trend line resistance, 100 periods moving average, and the technical resistances to continue higher, to continue the impulsive wave to the upside. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.